I put 40,000 US dollars, and I do that at 7 o'clock in the morning. And by 9 o'clock that night, some 14 hours later, the account is now at $465,000.
This is Tom Hugard. In this video, he's going to show us how he took $40,000 and turned it into $465,000 in one day. He's going to break down every single trade that he took that day, along with an explanation. And if you don't know Tom Hugard, I want to introduce you to him, okay? Because he's actually one of the guys that got me into trading. I was so inspired by this guy. He's an author of this book, one of the best-selling trading books, #1 top rated. It's called Best Loser Wins, Why Normal Thinking Never Wins the Trading Game. If you haven't read this book, you need it. This is not some 20-year-old on YouTube that just figured out trading last week, has a finance degree, and was working for JP Morgan and Chase. And then after 10 years on the trading floor, decided to trade his own money. So look at that, 23 years trading. Okay, so just imagine getting so good at trading that you could generate $465,000 in one day. Absolutely incredible. This guy is no joke. So let's get into the mind of a veteran legend trader. Buckle up.
When I started out trading some years ago, I followed the normal doctrines of trading. You know, risk 1% of your capital, risk 2% of your capital. If you were extremely risk-loving, perhaps you risked 3% of your capital, of your account. Over the years, it began to dawn on me that actually that may not serve the purpose that I want to achieve. Why would I have a $100,000 account if I was only going to risk $1,000? Why have $99,000 sitting in the account if I wasn't going to risk them? It began to annoy me that when I had really good days, I just wasn't making enough. I wasn't capitalizing on as much on them as I wanted to. And as I got more experienced in the art of trading and mastering the psychology behind good trading, and I just want to add here that I don't for one second think that you can become a good trader purely by studying technical analysis or fundamental analysis. I think you need something else to be a good trader. I think you need to have a keen and astute awareness of your own limitations and a desire to overcome those limitations.
Okay, two major points here. First of all, is getting good at the technicals, learning how to read a chart, learning how to execute a technical strategy, whatever that strategy is that the only thing that it takes to get good at trading? He's saying absolutely not. And he's saying on top of that, you need two things. One, you need an awareness of your weaknesses. Do you even have an idea about that, right? That's hard enough because these things are in your blind spots, or things you're unconscious of. So that's challenging even to know what those are. And then two, not only that, but you have to actually have a very strong desire to work on those things. And by the way, if you want a very easy way to figure out what that is, I recommend you take something called Myers-Briggs personality test, okay? So if you go to 16personalities.com, 16personalities.com, fill out that quiz and it'll tell you what your strengths and weaknesses are. Then you can pop it into ChatGPT and say, give me some advice for what my weaknesses are and how to work on them for day trading, and it'll help you out. That's the easy way to figure that one out.
I put 250,000 Danish kroners, which is about 40,000 US dollars, and I do that at 7 o'clock in the morning. And by 9 o'clock that night, some 14 hours later, the account is now at 2.8 million Danish kroners, which is about $465,000. Now, all
from 40,000 to 465,000 in a day. That's just nuts.
All of this I will of course provide documentation for. But again, I stipulate here, this is not because I want to show off and show you, oh, what a great trader I am. Because although I'm a decent trader, if I really had to give a balanced representation, I would have to also show you all the times that I put 250,000 Danish kroners in and I've blown them all within an hour or two of trading. So see the video here not as my attempt to show.
Again, how you can tell he's being honest. He's saying he's done this many times before and it went very wrong, okay? But he knew how much risk he was taking on, right? So it's not like he blew it because he didn't know what he was doing. He intentionally took on that kind of risk for the possibility of making that kind of reward.
Show off, see it as an attempt to show you what trading can be like if you decide to be aggressive. And you don't even need to risk as much as I have. What this video could also give you some enlightenment to is to how to add to winning trades.
And that's what he's good at.
So the content here is that this is
that's what he's really good at, is adding to winning trades. They call it pressing your bets, pressing your winners.
Dream example of adding to winning trades. Most of it happened to be caught on camera because I like to record my trades so I can go back and view them for later educational guidance for me. I feel that this video is educational, but it does have an extreme risk profile. Not only that, you need a fair degree of margin. I'm trading with TD365.com, and here I'll have 200 to 1. Also, the right day has to be present. You need a trend day, and trend day is usually on stock indices only one in every 5 days. But not only that, you need the right mindset because it's...
Okay, so let's just underline that. Now, you're going to get a trend about once a week, maybe once every 10 days, something like that, okay? So in order to do this, right, in order to actually make some banger trade like this, what he's making clear is that you need a trend day, which means the market has to be trending, all day, mostly, okay? So those days don't happen very often. And for something like this to work, he's telling us we need to be very patient. We need to be willing to be very patient for one of those days to happen, A, and B, we need to be able to know what signs are telling us that it's likely to be a trend day.
It's not like you're going to receive an email in the morning before the trading day starts and saying, "Hello, Tom, today is a trend day."
Exactly.
Trend days have a sneaky way of crawling up on you, and they tend to be the result of gap ups that then gets filled, or gaps down that gets filled. That's when you get the best trend days. I have identified them as part of my research, but this video is not about how to identify trend days. This is about what you do when you think that a trend day is at hand. So here is my credit wire.
Okay, so this is how he starts the day. Depositing 250,000 Danish kroners into the account, which he said is about $40,000.
250,000 goes into my account. This happens in the morning. And here's a little bit of instructional content. I do a lot of pattern recognition, but pattern recognition in a manner that you have perhaps not been subjected to before. So what you're seeing here is Thursday's trading day in the DAX, and then you see Friday's trading day in the DAX, and you actually have a very nice trend move higher. It isn't a trend day because of this reversal back down again. I mean, we pretty much close unchanged for the day. When Friday's price action is not able to supersede the high of the previous day's price action.
Okay, I say this all the time. The most common form and most reliable form of support and resistance is yesterday's high and yesterday's low. So if today's Friday, right, you'd look at the prior day and you'd mark out the high and the low of that day. And I'm always doing that. It's one of the first things I do when I get to the charts.
I.e., when the high of Friday is unable to get above the high of Thursday during regular trading hours, the odds are overwhelmingly high that we are going to get a lower move on the Monday.
Okay, so he's saying he's figured out just in his back testing that if that happens on a Friday, then on a Monday, because of this rejection, right? Because the price went up to test the high of yesterday, got rejected, and then had to move down. And then he's saying if that happens on a Friday, on a Monday, the odds are very high that we will get continued selling.
When this this trade transpired. However, when the market gaps up on a Monday.
And just really quick, if you actually just drew a line and you connected these lower highs, right? You've got a high here. You've got your first lower highs here. Okay. Then you've got a lower high here. then you've got a lower high here. Now, if you just were to draw a line connecting these lower highs, what you've got is now a bear trend line, okay? Downtrend. In other words, a downtrend. So it's not really anything crazy to expect that that trend will continue or that there will be selling along that line, because the price has already demonstrated that traders are willing to sell along that trend line 1, 2, 3 times.
One day when you were expecting a lower move because of the Thursday, Friday pattern, you often get what's called a trend day. So the market, as you can see, is trading around 14,000. And I felt that 14,000 was probably also going to act as a psychological barrier. Barrier in the context of support for the market.
Why? Now, why would that be? Pop quiz? Why would 14,000 be a psychological support or resistance, right? Support or resistance are magnets, right? So he's saying that's a psychological support or resistance line. Now, why would that be? The answer is big round numbers. The market likes big round numbers, and it likes to test those big round numbers. And I know that sounds crazy, but that's also a highly reliable form of support and resistance. When you see a big round number, the price will often use that as support and resistance, and he knows that.
So
Why? Because he's a student of Al Brooks, like me. In fact, that's how I found out about Al Brooks, was from this guy. So I got a lot of gratitude for this guy.
Started buying here at 8:15. This is UK time. I started buying the DAX at 14,007, and within a relatively short space.
I just want to point something out. So he just took 2 pieces of data and he combined them. So you're already seeing mastery at work, right? Because a lot of traders will just use like one reason to get into a trade, if that. But what he's doing is he showed us that he knows that there's a statistical likelihood based on his back testing that if this happens on a Friday and this area gets tested and fails, gets rejected, that on Monday we are likely to see a move down. So that's one data point that he's using for his thesis, for his trade idea. The second thing now is he saw that we were near 1400, and he knows that 1400, because it's a big round number, is a psychological support or resistance level. So he's now combining 2 different data points that support his thesis, which is bearishness.
So the market, as you can see, is trading around 14,000. And I felt that 14,000 was probably also going to act as a psychological barrier. Barrier in the context of support for the market. So I started buying here at 8:15. This is UK time. I started buying the DAX at 14,007. And within a relatively short space of time, I bought a pretty decent base position. The market did dip just below 14,000 at 8:37, and I bought a little bit more there and here. But otherwise, what you should see is that I pretty much add to winning trades throughout. I don't add to losing trades.
Okay, key point. And he talks about this in his book. By the way, I'll just push it again. Best Loser Wins. You have to read it. It's must reading for all traders. He talks about this in his book, that this is when he was actually working for a trading firm. He was able to see data that showed that the worst traders statistically add to losing trades, and the best traders do not add to losing trades. They add to winning trades. So if you want something to practice, that's a good one.
But I needed to establish what I called a base position. Now, as I pointed out earlier, my stop loss, had I been stopped out, would have lost me half of my account, 45% to be.
That's so crazy. Exactly. So his first trade of the day, he said got pretty close to his stop loss, and if he got stopped out, 40K gone.
But I didn't get stopped out, which was fortunate.
Or no, half of his account, so it'd be 20K gone.
I had put a stop loss down around 13,000. I think it was about 950, 60 or thereabouts. So I didn't get stopped out. I'm not saying that it was close, but it wasn't far off either. And as the morning progresses and the DAX is rallying, I will buy more and more. So by midday, I'm long 3,750 Danish kroners per point, which is about $600 odd dollars per point movement. Now, next page will show you what that looks like on the chart, because this is where I'm beginning to buy. Of course, I didn't know that this was going to happen. I just made a bet that 14,000 was going to hold. I used some price action. You see this bar here. This is a significant bar because it's a bar that makes a fresh low, but it closes in green and it has virtually no tail. And I use that as a guide that if the market...
Okay, so he's saying we made a double bottom here, a little micro double bottom, okay? You actually have 3 pushes down, right? You have a push down there, and then a push down there. And then this green candle closes above the prior red candle, okay? And then you get a second one right after that. So he's looking here and he's saying, I'm going to get long right there.
Market begins to trade above this high, then price action will dictate that we are going to get higher prices for the following 2-3 bars. See, that's the thing about technical analysis. Most people don't realize that the technical analysis is really only has forecasting value for the first 2 or 3 next bars after you get the signal. But that's perhaps an academic discussion for another time. I'm buying 2,000 here and another 1,000 here. This is Danish kroners. And at this point, I'm feeling pretty good because this bar takes out the prior top's high. And
okay, so that's great. So he's long here, right? He withstands this pullback. Now notice the pullback actually went pretty far down and retraced actually, almost all the way down to where his entry was. Okay, so it's a pretty close call. But then immediately the bulls start buying again and we get trend continuation. And then after we get consecutive green candles, a little tiny red doji pause, and then a very strong bull bar closing on its high. He's adding again and pressing his winner even more. And shout out to my man Madar. He says he loves your channel. Thank you, man. I love you.
I'm buying another 500 here on a slight retracement, and then I'm adding to it as we're breaking above this high. So all in all, I'm feeling pretty good here because the market is zooming higher, and I'm up about 150 or 105, 110 points.
Okay, now how many traders would just take their profits there? Pretty much all of them. Okay, right? Pretty much all of them. But he's like, nope, more.
Now, trend days happen in about 20% of all trading days, and they're not easy to catch. I've spent years working on methods to identify them, and as I said, this video is not about me describing how I identify trend days.
It's actually pretty straightforward, honestly, if you look at this, okay? Because you could get in here. He got in very early, right? But even if you waited for this pullback and then this green candle, right? And then you just drew a line and you said, now we have a higher low, right? We've got some trading range price action here. We went down and we went up, and then it looks like the bulls are taking control of the market, right? A higher low is the first sign of a bull trend. So even if you waited until there was actually a pretty clear entry signal for right here, right? You still would have crushed it on this trade as long as you were willing to hold.
That has to come at another point. But one of the key components for a trend is that the market is gapping higher and surprising many people, i.e. catching people on the wrong foot. So when you think about it, the essence of a trend day, there's very little overlap between the bars.
Right.
Yeah, you see a lot of overlap here in the beginning, but then you pretty much see the market just keeps making higher lows and higher highs with the occasional 20-minute retracement and then higher highs all the way. Every single bar's high and low is higher and lower than the previous one. That's a good sign.
It's a good sign
for a trend day.
Right. So if you're assessing the strength of a trend, right, this is one of the most important skills, right, that I'm always working on, which is like when you look at a trend, okay, first you got to be able to identify that it's a trend. You got to be able to know the difference between what's happening here and then what's happening here. Okay. But the second thing is, how do you assess the quality of the trend, the strength of the trend? Because if the trend is strong, it's more likely to last. If the trend is weak, it's not likely to last. So what do you do then if you're trying to assess that? Well, one thing you can do is just count the streaks, right? Look at the pullbacks and assess them relative to the bull closes, okay? So for example, let's count up the streaks. This is really simple. You could teach a 5-year-old this, okay? As long as he can count, okay? Look, 1, 2, red, 1, 2, red. So it's like 1, 2. That's 2 for the bulls, 1 for the bears. 2 for the bulls, 1 for the bears. 2 for the bulls, 2 for the bulls, 3 for the bulls, 4 for the bulls. Okay, so technically that's 4 bull bars, although that is a doji. And then look, the bears got 2 candles here, and then the bulls got 4. Okay, so you can see it's think about it like points on a scoreboard, right? Bears 2 points, and then what happens? The bulls come back with 4, 3, 4, 5 points. Okay, the bears score 1 point, the bulls come back with 4 points. The bulls score 4 points here, 4 points here. Bears score 3 points, but they don't score 4, okay? And then the bulls come back with 2. So if you kind of look at it like a scoreboard, it's actually fairly easy to assess these things. I don't know if it's easy, but it's not that difficult, right? As long as you can count.
So the paradox of a trend day is that everyone basically agrees. Everyone thinks this market is headed in that direction.
Yeah.
Hence, there's no overlap.
And the other side of that is that what it means is that bears are trapped, okay? Bears are trapped. One side is trapped. So you don't get a trend day unless one side gets trapped and they give up.
So, was this a good trade? Yeah, it was pretty good. Was it perfect? Hell no. And there's definitely room for improvement.
And I said this about Tori trades when I was reviewing her trades. She looked at a lot of her trades, okay? And this girl has a really high win rate. She wins almost all of her trades. It's pretty crazy. But she's still looking trade by trade basis at what she can do better. And I just want to share that, when you're looking to excel at something and really be excellent, the best in the game are always looking to improve, even when they win. Now, most people, if they win, they party. They don't ponder. But if you want to be the best at trading or anything, if you just want to excel and be consistently profitable, you have to always be looking at how you could have done better and how you can improve. So you can't just party when you do well. You have to ponder when you do well and when you don't do well. And that's just a trait, a behavior trait that you can observe of the best of the best.
And why am I saying that? Well, that becomes evident right now. This is me taking my profit here about 1 o'clock in the afternoon. And you can add this up to yourself, but it adds up to quite a lot of Danish kroners. What I think is
looks like a lot.
Interesting is this. I decide to take my profit right here and wait for the US Open because I'm thinking the US market is probably where the next opportunity is going to be. And the problem here is I'm beginning to think, because when you're looking at this chart here, there really isn't much to argue for taking profits. And I miss this entire move.
Oh, wow.
In fact, I made 110 points, but I left 250 points on the table.
Nuts.
Nevertheless, I did well. And later on that afternoon...
And now notice, did you guys catch that? Did you guys catch that? Did you guys catch his emotional reaction? Most traders, most amateur traders, they'd be beating themselves up, right? Because he's just saying he could have made like 2 or 3 times more than he did. He left a lot of money on the table, right? This is a huge, okay? And it happened so extreme, right? If you were long here, it's like no drawdown. It's just the market's just getting sucked up. And his reaction was like, yeah. It's like,
And I miss this entire move.
See if you can listen for how he feels about it, okay? Because that's going to tell you about his psychology. Listen.
In fact, I made 110 points, but I left 250 points on the table. Nevertheless, I did well. And
He's like, whatever.
And later on that afternoon,
that's a legend.
Nasdaq became my focus of interest. I started shorting the Nasdaq, establishing a base position at 10 minutes to 4 UK time. I did that around 12,654. Let me show you what it looks like on the chart. I short the Nasdaq down here, and I do it because this to me seems like a double top. This is a 10-minute chart, and I'm
okay. So now we're looking at the Nasdaq.
Basically selling a double top.
So he's saying he's selling a double top. Why? Because you got a top here and a top here. Okay, it looks like a top here, right? You've got 2 consecutive bear bars. You've also got a little top here, okay, and you've got a top here. So you could argue that that's a wedge, right? Because you have a push up here, and then you have a push up here, and then a push up here, okay? So he's saying, okay, this looks like it really could be a double top. Now, I get why. I mean, that makes sense. Plus, not only that, but he has 2 consecutive bear bars showing downward momentum, right? After there's already been some selling here and some selling here. So we can see that the sellers are present, okay? They rejected this area. They sold immediately as soon as the price got into this area. That's why you see a tail. That's what that means, right? If you were to look on a shorter time frame, this is a 10-minute chart, but if we were to look on a 1-minute chart, we'd see a bunch of bear bars, right, where this tail is, okay? So we know that there's sellers in this area, showing that this area up here is a resistance area, meaning sellers, okay? And then look what happens every time we get into this area. Look, we got into that area again here, okay? Bulls were able to make some progress there, but as soon as we got a little bit higher than here, sellers came in immediately. And then now this looks like, it really does look like the sellers are taking in control, because when you have consecutive candles, that is a sign of momentum.
My stop loss at this point would be above here. As the market slides lower, I see...
Okay, and his stop loss is above here. See, a lot of traders will try and get away with the stop here, but he's putting it up here, which is, it just shows that he knows he's clear on the risk that he's taking, and he's actually giving it some room, right? He's giving it some room.
One green candle. And that green candle is important to me because I use that as an inflection point, like a pivot, like a pivot point, essentially. But not pivot point in the context of, open, high, low, close divided by 4. Not those kind of pivot points, but the pivot point says is, at this point here, this still looks like an uptrend, and we have nothing but higher lows and higher highs.
Right.
But if this green candle's low was to be broken, I would have imagined that this market, technically speaking, should be headed to the old lows.
Yeah.
So I'm placing orders in below the low of this green candle, essentially betting the open profit that I have from the earlier position. So as you can see here from my trade records, I am placing quite a lot of short orders as this market falls. But again, what you should also notice is I'm not adding to a losing position.
Key point. He is not adding to a losing position. He is only pressing his winners.
I'm purely adding to a winning position.
Very key point.
So this is what it looks like up close.
Look, he's adding, okay? Like, this guy's so aggressive, man. I love it. I love it, dude. It's so fun. Look, adding again, okay? Adding again, adding again, adding again, adding again, adding again. Look, 16, 30, 16, 33. So 43, 53, almost 10 minutes later, 57, right? So it's like every 5 or 10 minutes, he's adding.
With the entry points, price, and time. Now at this point here, I'm actually getting a little nervous because my position is big and the market has...
Yeah, so if you're short, right? You're betting on the price coming down here and you add it all the way down here and then you see this guy. Yeah, you're sweating, baby.
It's made a 90 point...
A big bull bar closing on its high. Very strong sign of bullishness. Oh man, you're sweating.
Rebound. So I'm hoping for some kind of weakness. It was actually a mentor of mine, Bryce Gilmore. I sat and traded with him on many a nights, trading S&P 500 futures. And one time,
hey, that's what I trade.
He said to me that he liked to actually wait. If he wanted to short, he liked to wait for one red bar on a shorter time frame. So if he was trading...
That's what I do. That's actually what I do.
Off a 5-minute chart, he would then zoom in on a 1-minute chart and wait for one red bar. If he had the sell signal on a 5-minute bar, he would wait for a red bar on a 1-minute time frame before he actually initiated his sell short.
This is a really, really smart strategy. So if you're looking at a higher time frame, say a 5-minute chart or a 15-minute chart or a 30-minute chart, whatever, okay? And you are bearish, right? Your premise is the market's going down, but you don't see a bear close, okay? You don't see a with trend candle close if you think the price is trending down. Go to a shorter time frame. At least this is one strategy that he's talking about. And let's say you go to the 1-minute or the 2-minute and wait for a bear close there. So then at least you have a data point that supports your premise. It's a very smart strategy because it's using the data to verify what you think, that what the market is saying about your position, not just what you think is going to happen.
At this point here, I'm actually just selling short the moment I see this bar materialize. But what you don't realize is that this bar closes at its low. But 10 minutes is a long time when you sit and wait for a market bar to close. And during this, it could have come down here, it could have gone back up again. But the fact that it closed right at its lows told me that this bar here is longer than the prior bar and longer than the bar before. It closes below the respective lows of the two prior bars. And to me, this feels like a continuation bar of the trend that has already been set in motion.
Yeah, I mean, it makes sense, right? If you were to connect a line and you were to connect all of these lower highs, right? It probably fits either perfectly or almost perfectly, right? Which shows you that as soon as the price got right into where that trend line is, there were sellers there waiting, which is confirmation of a bear trend.
That's why I'm beginning to add even more aggressively to the short position.
Amazing. And shout out to my man, Adib, who said my video helped him. Shout out to you, and I appreciate you letting me know that.
So now I got the base position I established. I got the first add-ons, and now I'm adding even more. We started shorting at 12,653. We're now down at 12,530. So we're basically just keep squeezing the short side, keep squeezing, keep pressing, being aggressive. Down here now the market is 12,000.
Okay, so now, we were up here. He got this small pullback, okay? And then very strong selling, right? A bear bar closing on its low, relatively, medium to big looking candle. That's a very strong sign of momentum. And then look what happens after that. Now, what I want you to do is look very closely here at these three candles. And what I want you to see is that the first candle is a decent size, okay, relative to the bars on the chart. I mean, this one red candle is as big as these prior three bull bars, okay? So notice what happens next though. The second candle, is it bigger or smaller than the first one? It's bigger, right? It's about twice the size, maybe even more, okay? And then the next one is about equal size to the one before it, okay? So this is a sign of acceleration, a sign of momentum. So if you want to look for signs of confirmation that confirm whether you think the price is moving up or moving down, that's one of the biggest indicators. And look, if you can see the similar pattern here, okay, right? We had a kind of like a medium-sized one, and then this one is bigger, and then the third one's even bigger, okay? And then look what happened after that. Boom, okay? So he's saying after he sees this, he's expecting more down, which makes sense. It's a data-driven analysis.
422, and obviously my account has swollen. But I didn't want to make the mistake that I made in the DAX where I got out way too early. So I am gunning for the old lows to be taken out. That's what I'm betting on here.
Makes perfect sense to me. And shout out to my man Kamal. He says he loves the channel. Kamal, I love you watching. Thank you.
Now I wanna give you some time, some pause for reflection. Can we agree on a couple of things here? Can we agree on that what I'm doing here is not something you wouldn't be able to do either? It may not be that you can do it in this size right now, because this is a question of the emotional pressure. But if you were trading, say, $1 a point, and you could do this at $1 a point, don't you think you'd be able to do it at $1.05 the next time? And don't you think then you could squeeze it up to $1.10 the next time? And before you know it, you could do it in $2 a point. And if you can do it at $2 a point, you've already doubled your trading size. Now imagine that you have 5 years to keep progressing, getting better and better and better. Don't you think eventually you could get up to a decent trading size? And are you going to experience days where you're pressing the trend only to see the market do a V reversal? Of course you are. One of the reasons why I'm not this aggressive in my Telegram channels is because of the amount of V reversals we've seen, for example, in the Nasdaq index over the last 6 months. And the amount of times I had built up a significant profit only to lose it all because I've added too aggressively, and then the market all of a sudden changed direction. But in this case, it's not. And hence I keep adding to my short position. because we're not down at
And he adds even more, right? Very confident that we're gonna take out that low or at least get there, right? So this is a very confident trader, and he's very confident in his position. However, notice that he's using data. Okay, he's using data. And the fact that you have 3 very strong, very big bear bars with accelerating momentum closing on their lows, as we pointed out, shows you that the trend is still strong, most likely. And if we look at these 3 bull bars, right, look at the strength just visually, okay? Knowing nothing, you could look at these 3 bull bars and compare them to the prior 3 bear bars. Now, do the bulls look stronger? Does Team Red look stronger or Team Green? Team Green looks pathetic in comparison, okay? So he's saying he's still bearish even after this pullback, expecting more down, which makes sense. It looks like the trend is still happening just based on the bars on the chart. Nothing crazy here.
the old lows yet. And eventually, the market reaches the old lows and I begin to take profit. And it's a big profit. And that's how you make 1,000% on an account in a day.
1,000%.
I hope that this actually made sense from you, not from anything else, but from a pragmatic point of view. I don't want you to sit there and think, wow, that was amazing. What I want you to do is just think, I think I could do this. I may not be able to do it in 500 a point at the moment, but if I could do this at a 1 a point or 2 a point, imagine where I could be in a year's time. Imagine where I could be if I began to add to my winning trades, not losing trades. Losers are the ones that are adding to losing trades.
Do not add to losing trades. Only add to winning trades. I took this to heart, okay? And I watched this video 3 years ago when it came out, and I did what he said, and it was great advice.
But winning traders are the ones that add to their winning positions.
Winning traders are ones that add to their winning positions, okay? Winning traders.
Now, expect to be uncomfortable. And this is something that I talk a lot about when I discuss the psychology behind trading, is that you gotta expect to be uncomfortable. And if you want to read a good book about this, then you should read the book by Charlie D, legendary bond trader. It's written, it's published by Wiley, and it's written by William Fallon. Actually, I got about 25 copies, so if you want to get one off me, just send me an email. I'm sure we can sort something out. But it's a really good book because...
Thank you, Leandro, in the chat. Thank you.
Here's Charlie D, who says, good traders are the ones who know that good trading will make you uncomfortable. Most of us will seek comfort, be it in
most human beings seek comfort. I mean, we all seek comfort, right?
Life, in vocation, in trading. But actually, if you are used to being uncomfortable, you'll be used to running positions, and you'll be used to seeing your paper profits swell up and then disappear again, swell up again. Because if you look at this trend down here, it's not like it goes from here to here in one straight line.
Right.
This move here is a good 100 points. This move here is 70 points. So that's 70 points times, I think at that point I was short 6,000 Danish kroners.
Yeah, okay, so imagine you're short 6,000, okay, $6,000, 6,000, whatever, okay? And then, and you have to sit through this pullback, right? Like you are sweating.
Well, that means that 300,000 Danish kroners just disappear out of my account again on paper profit.
Yeah.
That takes a little bit of getting used to.
Takes a lot of getting used to.
It means that you are uncomfortable. And this is what it'll all look like. When all was said and done, there's the entries, there's the exits, time of entries, time of exit.
Now again, this is a guy who's been at this for a very long time, 23 years or more, okay? Wrote a book on trading. Definitely check that out. I also highly recommend The Mental Game of Trading by Jared Tendler. And if you want to check out my strategies, go to tradesbybren.com/3setups. And I'll give you a free downloadable PDF with 3 of my favorite trades and a 15-minute training, detailed training video breaking down exactly how I find them on the chart. Hit the like button if you like the video for me, and subscribe if you want more, and I'll see you in the next one. I appreciate you.